Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hi, welcome to the latest episode of the podcast. My name is Mark Walker. I'm the editorial director of the Fintech Times, and I'd like to welcome my guest to the studio.
I'm the CEO and co-founder at Manza. We're a global settlement platform. And I spent the best part of my career working in big tech, emerging tech, and then wandered over to financial services, where I actually worked at Swift. So that was kind of my initial induction into payments. And that's also what led us to build a global settlement platform to really alleviate some of the challenges that you see in traditional payments infrastructure.
Yeah, and I guess it's quite a big topic at the moment. Obviously, global, cross-border payments and everything has been used for many, many years. And as you kind of rightly said, Swift really was the only real way of moving on around for many, many years. But obviously, we're now seeing lots and lots of changes coming in with the advent of fintech. Whenever it started back in 2008, if you agree everything, everyone started thinking about better ways to move money around. And a lot of the first use cases of fintech were really about trying to do things quicker and faster. Obviously, now we're into things like stablecoins and areas like that. But maybe from a bit of a background point of view, maybe give us sort of an overview of where you think sort of payments have come in the last sort of 3 or 4 years prior to now. And then we can talk about some of the newer ways that we're using them.
Yeah, I think it's a great question to start off with. I think when you think about payments, right, there's like several buckets that payments tends to fall into that a lot of times, maybe to the average user, you don't really think about, well, when I go and pay for my coffee, what actually happens in the back end of it, because ultimately you're not necessarily part of the wider flow, right? Either the POS works or it doesn't work, right? Or either the internet, online portal works or not. But when it comes to high value payments, I think that's where, it's really interesting to look at the last couple of years and where they were, right? If you're sending, let's say, a business transaction or even just any large transaction that's probably kind of north of, $5,000 and then going into like 10,000. And then if you start going into the millions, the fact is it's going to take quite a number of days for that to settle cross border. And at the same time, also, it's going to be quite costly. So I think what's been interesting in the last 3 to 4 years is that initially in the payment space, there was a lot of focus on, how do you make consumer payments quicker? How do you make that cheaper, right? How do you do, account to account? How do you use mobile money? And these are all very relevant use cases, but I believe they were actually the catalyst for putting that lens into, the B2B payments or the high value payment space. And I think what's ultimately happened is that the pressure that was created by the pandemic of realizing that, maybe things are not working as efficiently as they need to, ended up meaning that there was a lot of kind of like alternative views in terms of what could in any case like provoke change within payments. And I think that in conjunction with what happened within the crypto space in terms of just like crypto evolution, stable coins coming into the landscape and becoming a tool, right, that could be more reliable, that could be more accessible, then became what is today suddenly like this massive use case within payments where you're like, of course, it's a no-brainer. Why wouldn't I send, $5 million over the blockchain, right? So I think there's been quite a concentrated evolution in a couple years. However, what I would say is that even 8-10 years ago, right, we were already looking at this space. We were already, contemplating how blockchain might facilitate value transfer, right? But I think there was still quite a, potential lack of confidence in the infrastructure. And also fear, right? In terms of what does that mean of changing the entire landscape of what has been status quo.
Yeah, I think that's an interesting one. I can't remember exactly who said it, but it was an executive from Standard Charter, I think about 2 years ago on a panel said, crypto has been a massive, massive deflection of the actual use of blockchain. And actually, all of the ICOs and the various things that came with a lot of the sort of mistrust of the crypto industry actually had a negative effect on the use of blockchain as an actual technology that could solve some serious problems.
Yeah.
And that's, I think, what we're kind of seeing now is that, the stable coin era is now becoming more interesting because it is really bridging the gap
Yeah.
between the sort of the crypto world and the traditional finance sort of world.
Absolutely. I think if you look at if you look back at like 2017, 2018, when blockchain first started to have, let's say, a more institutional lens to it, right? You had primarily use cases which were about identity. It was about value transfer and storage in a secure way. It was about traceability and visibility, whether that was in the consumer goods industry or whether that was in financial services. But I think ultimately, because also regulation was not necessarily supporting it very proactively, it meant it kind of fell through the wayside. But then also just this underground movement of like crypto enthusiasts were ultimately building everything and anything, including meme coins, including, other type of tokens, etc. But that was also because, again, the proactivity of the industry really wasn't there, right? You had really just like literal different glitches. 100% like the more like traditional banking industry was extremely, critical of whether or not this had any relevance. And I think that was coupled with the fear also of what was happening within neobanking and how much neobanking was putting pressure on traditional banking to innovate, right? Plus open banking and you name it. So there were all these kind of convoluted areas that, frankly, I think out of fear, there was a lot of, no, we're not going to touch this, and no, that has no relevance. I think if much earlier we would have looked at it from a use case perspective, actually, I think institutions like banks would have probably been at the forefront of what is now the stablecoin era.
Yeah. And I think it's kind of an interesting dynamic, isn't it, between sort of business use, bank settlement use, and consumer use. And you kind of feel like, especially like in, say, the UK, where you've had the faster payments network has come in for a while, consumers kind of don't understand why things aren't instant anymore. It's like, well, I can send in the UK between me and that person and it happens within a second. What's the difference between sending it overseas? So do you think the consumers are driving the banks and the industry to adopt sort of stable coin, or do you think it's actually the actual businesses themselves that are driving it now that they've also seen how easy it is to reduce the time and the friction?
I think it's twofold. One, for sure, consumers have created ultimately the upward pressure to utilize tools, capabilities within kind of like financial infrastructure that makes things more efficient. A good example is that, when you look at the history of USDT, which is Tether stablecoin, right? It is in the advent of the pandemic that this actually started to accelerate. And why? Is because in emerging markets where usually you'd go maybe to your local FX broker to get US dollar to hedge against your own currency, suddenly because people were having to isolate and you couldn't really, leave had the house or do your usual means, but actually there was even more macroeconomic like impact on your own currency. People were looking for other tools. And so they found, again, USDT, a stable coin, right, that allowed them to hedge. And so they're like, this is a no-brainer. Why wouldn't I do this, right? Because it gives me access to basically the US dollar instantaneously. And that is actually from a consumer side how stable coins started to grow, especially in these markets, and why it became such an important staple. Because it wasn't born out of like the necessity, to your point, right, of countries where maybe account-to-account transfers are super easy, but where you have a stable currency. It was born from an absolute need basis in certain jurisdictions where, there were much more pressures felt. And I do think that when you're looking at it from that perspective, you think, who are these consumers? These consumers are 100%, in the, let's say, younger generation that are, coming of age and are very curious about also new technology and who've grown up with like very reliable maybe, or also not unreliable, but like global access to kind of money and are wondering, well, why should I be restricted? Why, if the infrastructure here is not working, why should I be restricted and impacted, right? And so they're on Twitter, they're going and looking at all these new solutions. And I think that's changed the expectations from a consumer side. On the B2B side, you also have to think that, many of the like early founders, within this space are actually people who came from financial services. They're actually people who came from traditional banks, traditional financial services, and were like, this is broken, we need to build something new, right? And then on the business side, you have that same instance where, well, if day to day I'm dealing with a neobank maybe, and I'm a small to medium business, and that neobank is able to instantaneously, send my money, or a payments fintech is able to send my money cross border at a cheaper rate and much quicker, why would I go to my bank and send that money, right? So I think these expectations started to change, but part of it was on the consumer side, and the other part was when you're used to something on the consumer side, you start to question whether you can find other solutions on the business side too. And I think that's really been like the most pressurized way, this expectation change has changed. And I think to the large part, if you ask an average business owner, I don't think that they would know how many payments firms are using stablecoins in the back end in order to facilitate global payments. It's never been a necessity for the average user to know that or to know anything about how payments work.
Yeah, and I think that's a really interesting point, isn't it? Because everyone assumes that when a payment's made, some money is being debited from one account and credited to another account. Whereas we know in most cases that's actually not being done at all. It's just transferring a message that says, when we actually do our settlement, just remember you've got £1 less than you did have before because we've just done this. No money is actually moving. And I think that's what people find quite difficult to sort of get their heads around.
Yeah.
And the method, therefore, of doing that is obviously, it doesn't really matter, does it, how you're actually reconciling or settling?
Yeah, and that's the interesting part because, as we're building Manza, there's plenty of conversations we have had to have, which were around, how payments actually work. And the amount of people who end up like shocked nearly to find out that there's no real money, technically real-time exchange at that level, and that it is based on a messaging infrastructure and logic that then later on gets reconciled. It shocks a lot of people. And then suddenly that unravels the question of like, well, why does that need to be that way? Can it be different? And how can it be different, right? And so it's been interesting to realize how many people just don't understand at all payments infrastructure or have any knowledge as to how money moves globally. And again, there's not been a need to, right? It's like you drive your car. That doesn't mean that you could build that car, right? Doesn't mean that you'll know exactly how, the functions of, the suspensions work or whatnot. And that's the same for payments, right? You don't really need to know as long as it works. But the problem is when it then doesn't work or it's really costly to work, then that becomes a problem because you also don't want to drive around with a car that potentially has faulty suspensions and or breaks down every now and then, or the brakes are super loose, right? And that same analogy needs to be taken into this industry. People are paying now attention because there's alternative solutions that just simply work better.
And sort of moving on to that sort of area at the moment, obviously stablecoin usage, unbeknown to most people, has been ramping up massively behind the scenes as a settlement. What do you think that has gone very smoothly? Has there been issues with that adoption? And what do you think's going to, what needs to be fixed effectively to make that adoption even more widespread?
Yeah, great question. I still stand by the point that the lack of proactive regulation really hindered the ability for a more streamlined and a more successful adoption of stablecoins because there was a lot of scaremongering. Ooh, can I touch stablecoin, and which stablecoin am I allowed to touch? And will I basically get into trouble as a licensed fintech or payments company if I touch these stablecoins, right? And even though knowing well and good the benefit of that. Now, I think with the Genius Act, there was a huge change in just global confidence that, yes, we should all back basically stablecoin regulation and basically create more frameworks. And that's really been taking place for the last, the last 18 months or so. But there's still a lot of challenges because there is not a uniform way that this is being treated across different regions, right? There are all these different expectations across sub-regions or countries that suddenly, if you're a global payments company, you have to figure out, adhere to, and that changes and cripples potentially your entire business model. In parallel to that, you then see also suddenly bigger banks or so starting to adopt this, which again, I think questions also about, was it kind of like stalled until the banks were ready to adopt this, right? Or vice versa, either way. But it feels again that it is potentially only placed within kind of the favoritism of the entities that are having the most ultimately financial power to truly adhere to some of these regulatory purposes on the ground. So I think there's a lot still to be done at a global level in terms of really creating visibility and frameworks from a regulatory perspective that makes it much easier to navigate and much easier to ensure that we have global standards that we can follow. Very similarly to the likes of a SWIFT, right? And I think that's learnings we should all take from things that we've done really well, which have been, for the last 30, 40 years, the payments infrastructure that back then was extremely innovative and was unprecedented for its time and opened up global trade. And then now applying some of these standards and understandings of what needs to happen at a global level in order to allow that to happen within the Fintech 3.0 era that we're evolving into, which includes, stablecoin issuers, which includes licensed payments companies, whether, traditional or native stablecoin payments companies, which includes the banks, right, and other market infrastructures. I think that's where the regulation really still needs to be more proactive and needs to be more global. And I'm just hoping it happens soon because I feel like we've already been quite slow adopting this in the last 10 years. So I hope it doesn't take another 10 years to get to a global framework.
Yeah, I think it's a tricky one, isn't it? Because, like you say, Swift has been around for a long period of time. It's very easy for the banks to just rely on that because it's the standard messaging system. There's quite a few things that I wanted to ask based on what you sort of said. Is obviously we in Europe we had the MiCA regulations as well that came out, and that effectively almost overnight stopped people using USDT in favor of USDC because one was able to be approved and one fell outside of that framework. Do you find that the fintechs that sort of adopted a lot of the use of stablecoins then had to pivot their model very quickly to ones that were more in line with the new regulation? And is that potentially why banks didn't decide to move into stablecoins at that point because there just wasn't enough clarity on regulation for them?
Yes, I think that's correct. I don't think there was enough clarity, on regulation for many of the banks and just general players. And this is why, people put it kind of on the back burner. Because again, you have to focus on running your business and your everyday work streams. And so when you're thinking about rolling out something that new, you're going to think about, well, how easy is this to get off the ground and how much exposure do I risk, engaging into this? So I think that's for sure one facet of it. And I don't think that this overnight regulatory change and or assertion really benefited very well because it meant that many organizations who frankly for a couple of years weren't given guidelines were suddenly given guidelines. Were like, well, now you have to do it like that. And that meant they had to offboard users, they had to offboard partners, all sorts of things, right? Which again isn't the best for ensuring that innovative companies are able to continue to thrive. I would still put it on, like, again, regulators to say, well, this has been around for like a decade plus. It shouldn't have come to as a surprise. It wasn't a surprise. We could have proactively managed this and probably had better consumer protection and much less some of these like big stories that happen in the crypto space. They didn't need to happen, and probably with tighter regulation or better regulations that were more proactive could have probably avoided some of these pitfalls. But hindsight is always 2020. So hopefully we can again use kind of some of these learnings to say, okay, what's fit for purpose now? What do global businesses need and want, and why, and from whom? And what do consumers want and need from whom, right? And how do we ensure that we can give the necessarily guidelines and frameworks to protect those two target users, right? And whilst allowing for global platforms to add value to the ecosystem, just as previously many companies, whether it's cloud infrastructure companies or banks, etc., were allowed to do in the past, right? A very important piece to highlight. But yeah, I think there was a lot of scaremongering. So you did have a lot of people who said, I'm not touching that until there's clarity.
I'm not doing any more of that. Talking about sort of global networks, In my mind, there's two sort of players that have come forward with the stable coin sort of networks, as it were. One would be Ripple, and the other one would be Circle with their payments network. Do you see those two organizations as potentially solving that global problem, and everyone would use effectively their rails to move stable coins around? Or do you think that they're too specific and therefore people need a much more generic service offering like Swift, for example?
It's a good question. I think, rails are very interesting, kind of, because ultimately, when you look at payment rails and you think about what it takes to be able to facilitate not only like a stablecoin payment, right, but to be able to off ramp it and then to be able to pay it out into fiat or whatnot, that it doesn't only necessitate what needs to be done from a pure blockchain perspective, right? And so I think to assume that there's going to be one network that touches everything is probably not correct. Right. I mean, even in the most early days of Rails, specifically for like card networks, you still have two major players, right? Visa and MasterCard. And so, and many other layers of like payment, processors, many layers of, being able to have the, network operators. So or the endpoint operator. So I think it will require a village in order to, provide this capability and services to people around the world. That's a good thing, right? That's a good thing because it helps us also have choice. And I think, again, this is a very important piece that, yes, I think Ripple plays an important piece in a role in that. Does it maybe fit for purpose to everybody, depending on what jurisdiction or so you're in? Probably not. Does it Circle manage to serve everybody they want through their CPN? Also not, right? But that is because there are all sorts of other alternatives that are more fit for purpose or have deeper liquidity in certain markets or are just easier to use that might be more interesting. But then at the same time, maybe Ripple and Circle have a more institutional flair to it, right? So I think it's a good thing that, one size won't fit all. And I think that's what we've always seen, right, in the ecosystem. I think it's a good start. I think it's a good start to be able to see these networks because, again, it reinforces the notion that we need to continue to improve our market infrastructures and ensure that we can have something fit for purpose. And that's a great starting point that allows, many other solutions to think through like network and rails and what that looks like on kind of like new blockchain infrastructure.
Okay, so I mean, we've talked a lot about the past. We've talked a bit about the current. Where do you think we're going? What do you think could be the main sort of trends that we're going to see towards the back end of this year into next year even? Where will we be in this payments journey?
Yeah, I think, I think from a high value payments perspective, it's a no-brainer. I believe in the next 18 to 24 months, we can have stable coins and a blockchain infrastructure as one of the major and primary ways for us to transact globally. Now, will it be at a full 100% adoption? No. Will it be at 80%? No. Will it be at 40? I don't know. But even if we get to like that 30, 40%, that's actually quite a large percentage when you look at the usual adoption timeline that it takes for things like ISO 222 adoption, things like, open banking. All these changes took years, right? And so to get to 100%. So I think, will we be in 24 months' time at 100% of adoption where all payments are done through stablecoins? No. Is stablecoin the only kind of reality for us in the kind of that short-term future? I don't think so because, again, kind of ensuring that everybody's comfortable with the premises of how we think about money and what the logic of money is, going away from fiat will take much more time because humans are just creatures of habit. So it takes them a lot longer to adopt something new. But I think we're going to get to a very critical mass and we're going to see probably, especially in the banking space, a lot more adoption of stablecoin use and definitely in the fintech licensed payments companies world or ecosystem, you're going to see probably near like a 70%, 80% adoption in the next 24 months because it gives them a competitive edge. It allows them to facilitate those transactions at a fraction of a cost and allows them to ultimately real-time settle, right, into like at least the initial settlement account. And that is ultimately transformational in terms of suddenly growing your market share, right, and offering a much better client experience than, a traditional bank today, or maybe even 18 months I was able to provide the average business and or consumer.
Fantastic. From my point of view, I think it's going to be an exciting sort of transition, which we're still watching as we go. Thank you so much for spending time with me here at the FinTech Times.
Yeah, thanks so much, Mark. Great to chat.